Hey legacy traders, it's Tim Key with Option Legacy, helping you build a legacy through trading. So guys, I have something exciting. You can see from the smile on my face, some information that I'm going to share with you. So I did a back tested the markets the past 10 years, over 50 different tickers of our favorite tickers like Apple, Walmart, Google, Gold, FXI, EWW, all these popular things, either ETFs or popular tickers, over 50 of them. And I said, okay, hey, if we're in a channeling or neutral market, so we're doing this, not going anywhere, which is what we're doing, what would be the most profitable trade with a few different setups? What would be the most profitable trade with a 60 days to expiration? What would be the most profitable trade with 50 days to expiration? What would be the most profitable trade amongst the majority of the market with 40 days to expiration? Then I took it a step further. I said, okay, 60 days to expiration with an IV rank of 25, with an IV rank of 50, with an IV rank of 75 or more. And then same with 50 days to expiration, 25 IV rank, 50 IV rank, 75 IV rank, 40 days, 25, 50, 75 IV rank. So guys, I busted out and I tested, let's see, I tested the DIA, so Dow Jones Industrial Average, the IWM, so the Russell 2000 ETF, and then SPY, or the Spiders ETF. And I found some very interesting information. Guys, I am all about, as an option seller that sells option premium, we have to have an edge in trading. What is our edge in trading? It is implied volatility. It's understanding that we can leverage our implied volatility, knowing that implied volatility is overstated 83% of the time or more, meaning that if its implied volatility is a future estimate of how much movement, either to the upside or downside, an individual security will have. So if it's a future estimate, that estimate is overestimated 83% of the time. So what does that mean? If it says it's going to move up $10 or move down $10 in the X amount of days, that estimate is that actuality, it might only move $9. So there is this wiggle room, or it gives us an edge in trading. It's implied volatility. And using implied volatility as our foundation, our base, knowing that that's our edge, we can then set up high probability trades, and we can trade directionally neutral. So guys, let's pop over into the breakdown of this back test. So this is it. You're seeing it over here, and I can tell you right now, I'm going to lose some of you right out the gates, because you said, Tim, that's a spreadsheet and that's too much information. Others of you are going to say, give me more. Nom, 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 nom. So hey, this spreadsheet will be made available to you, but let me break down how I back tested these tickers. So what I did is, in the overall market that is channeling or directionally neutral, I said, hey, what is the best strategy amidst is how you say it, 52 different tickers of our most popular ETFs, and some of the most popular tickers, individual tickers like Home Depot and things like that. And I said, hey, if there's 60 days to expiration and an IV rank of 25, what is the most profitable trade in the overall market if the market's channeling sideways? And this is what came out. Testing thousands of trades, we found that an iron condor is at a daily entry. So we're used only monthly options at a daily entry. So what does that mean? We only traded monthly options whenever the situation was present, with 60 days to expiration and 25% IV rank. We would enter into that as often daily as we could whenever we could get close to these two things, 60 days and 25 IV rank. Then we found that a profit exit at 50%, a loss of 100%, short delta strike of 25, and a strike width of 15, brought in on average profit $41.84 dollars per trade, with an average profit and loss of 8% gains per trade, and the win rate was crazy 75 with a max drawdown of 24. So in this, I took these three strategies: 60 days to expiration, IV rank 25, 50, and 75. I ran them in the overall market with thousands of trades and found that the most profitable trade was this setup. And you'll see that if it's in green, it's the most profitable trade. So I did the same thing in 50 days to expiration. I said, hey, let's run it with 50 days amongst 50 plus different tickers. And what's the most profitable trade that we can enter into? It's an iron condor at the daily entry. IV rank 25, 50 days to expiration. We're looking to exit at 75% profit and a loss exit of none. Had no stop loss on there. Short delta strike was 15. Strike width was 15. Average profit and loss monetary value was 78.32, and average profit and loss percentage was 38.55 per trade. The win rate was through the roof at 89, and the max drawdown was 21%. And then I also ran it with 50 days to expiration with the 50th percentile, or IV rank, excuse me, and 50 days to expiration with the 75 percentile. Again, IV rank, because I didn't use percentile. They're two different things. I use IV rank. 40 days. And so I found these things, the most profitable trades with days to expiration and the IV. And then amidst the IV rank, I found the most profitable one concerning the days to expiration. And I applied that. Let's see if I can't do something like this. Boom. Here we go. So I applied that to DIA at 60 days, and I applied the exact strategy that we found. 60 days to expiration, the most profitable in the IV rank of 25. And this is the results that it turned out. And I'm not going to go through every one of these because you're going to have access to this spreadsheet and you can break it down and compare and contrast and all that stuff. Some you'll find has a greater win return on investment percentage per trade, whereas others have a greater win rate, so the probability. And some of you might say, man, Tim, I'm more conservative. What's more important to me is an implied what's more important to me is a win rate or a probability rate versus a return on investment per trade. But you'll have access to this. So let's look at a few of these. DIA with 60 days to expiration found that the most profitable time to enter into a trade of 60 days to expiration using monthly options was to enter whenever IV rank in DIA is at 25% IV rank. It came out with a profit of 709, and you look at these others at 50% IV rank, the most profitable trade that we found only pulled up 452 or 174. So we're talking about $600 difference just by having a slight edge of understanding that we can use past information to give us future estimates. And that's all this is a back test to give us what has historically happened. And then we go down, let's see, which is the most profitable one here. It's actually this one. It's not highlighted. It has an $805 gain over the past 10 years trading this strategy here. So we enter Iron Condor, 50 days to expiration, only whenever the IV rank is over 75 or over. We look at an Iron Condor, enter as often as possible daily whenever it's 50 days to expiration with an IV rank of 75. Profit exit at 75%. Loss is none. We have no loss exit. Our strikes at 15 deltas and a strike width of 5. Average profit and loss monetary value is $24 and return is 31%. The win rate is a great 86% and the max drawdown is that unhealthy, I say unhealthy, that unhealthy 38%. But something you know about trading is you have to have thick skin. Guys, you have to be able to kind of have that grit. I talk about the 3 Ps all the time. Having a plan, perspective, and patience. If you can have a plan before you enter into trade, then you can have perspective. What am I talking about perspective? I'm talking about previous experience partnered with future vision. That's perspective. If you don't have previous experience, you need to leverage someone's previous experience, like myself or someone in the legacy trading community, and say, hey, what's your experience here? Or run your own back tests and get experience from the market. What is the experience of the market? And then partner that with future vision to hold your perspective, that long-term view, and then follow through with patience. So there was a max drawdown of 38% on this one given trade. However, it still proved as the most profitable trade. So if you're willing to kind of have the thick skin to have the drawdown rate of 38%, that means at one time your account drew down or lost 38% of its value over the past 10 years, but its overall win rate was 86 and it produced these results. So guys, go back and look at this chart yourself, and you might see like something in IWM where it says not available. There just wasn't enough trades. So we took, up here, the 60 days to expiration, IV ranked 25%, and said only enter whenever that's possible. But there wasn't enough information to back test those results. It just wasn't applicable in IWM over the past 10 years. So would that be a little kind of indicator? Could that be an indicator that says, this might be a shot in the dark if I put on this type of trade right here? This could be a shot in the dark because it hasn't had enough historical data to produce results. But you can look at something like, let's say 50 days to expiration, IWM has no data or not enough historical data, shot in the dark, or it loses $7, we'll call that break even, or it loses 276. This information alone over the past 10 years might push you away, saying, hey, if there's only a monthly option at 50 days to expiration, I might not enter in IWM, because I know that if I can enter in 60 days to expiration, I could possibly turn a profit of $1,400, or if I can enter in 40 days to expiration, I could possibly turn a profit of $1,500. So guys, when I talk about having an edge in the markets, man, it's little things like this. I'm convinced that it is not the big action that an individual takes to be successful. I'm convinced that it's the small and consistent action that leads to radical results. It's having an edge. I call it specialized knowledge. So it's taking a little nugget, a little tweak, and applying that to whatever you're doing. It's kind of like this. It's impossible to steer a stopped car. But if you have a lot of momentum, you're going 100 miles per hour, you just give a little poof, a little tweak, and that car is swerving all over the road. So it's all about getting momentum with that small consistent action, and then once you have that small consistent action, when you make little tweaks like we're finding in these back tests, boom, boom, boom. I'm not going to trade IWM if there's a monthly option 50 days to expiration at any IV rank, because there's just not enough profits in it, historically speaking. Boom, I saved myself $800. Boom, I saved myself $8,000. Boom, I saved myself $10,000, $20,000, because you've got momentum through small and consistent action that then you begin to tweak and get some action. So break down this spreadsheet for yourself. Go and look at it. Look at the win rates. Look at the average return on investment from percentage base, from the max drawdown. Find what's most comfortable for you and apply these things. Taking action or taking in information without taking action is useless. So if you're going to take in information, put it to action so that you can see results. So guys, of course, let me know your thoughts. Reach out to me inside the Legacy Traders Facebook group. Direct message me on Facebook, message me here, or send me an email, tim@optionlegacy.com. I'd love to connect with you. And of course, if this adds value to you, because it adds value to me, but if it adds value to you, please like, share, and follow. Like, share, and follow. We have a free community, Legacy Traders Facebook group, where I'm adding value to you guys every day, because it's my goal to add value to you so that you can build a legacy of wealth through trading. All right, till next time, guys.